thought I was trying to kill her because she needed the funds from her closing to buy her medication. And I was trying to murder her. In Texas and Arizona and all the community property states, there's a whole thing in all the government handbooks. It says you must consider the liabilities of a non-purchasing spouse, comma, unless excluded by state law. Okay, what's the state law? That's like my first question is, what's the state law?
Welcome to House Money with Corbin Matise. Here we have real conversations with Texas real estate experts. You'll hear true stories about the market from the heart of Texas real estate. Let's go.
My guest today is Jason D. Harris, mortgage executive, operations architect, and one of the sharpest minds in American lending. Jason has overseen $1 billion in annual mortgage volume, built and led national teams at firms like Capital One, Deutsche Bank, and now serves as COO and possibly founder of directmortgage.com, a company reshaping how home loans get done. He's a certified mortgage banker, project management professional, and has held VA, SAR, LAPP, FHA-DE distinctions, and is even a private wealth underwriting authority. He is not just fluent in finance. He's lived through the chaos of 2008, scaled divisions across the country, and has done it all while holding leadership roles in underwriting, ops, credit, and capital markets. This conversation is much more than mortgages. It's about leadership, decision-making under pressure, and what it means to navigate risk in an industry that is built on it. So whether you're in finance, real estate, or just trying to understand how the economy actually works from the inside, this one's for you. Please enjoy the brilliant, the methodical Jason D. Harris.
Wow, I need to get your research team, man. I'm paying the wrong people. You got maybe look like I really know what I'm doing. It doesn't feel that way every day, but your research team crushed it.
I'm going to be honest, man.
I want to hire them to do my bio from now on.
It does take a lot of time to manage our research team because of the size of the team. Yeah. Just the head count is a huge load to bear. But I appreciate that, and I hope you enjoyed the intro. So you've been a mortgage professional in some regard for over 20 years. So I want you to pretend that you met someone who's about that many years old. So let's say you meet a 20-year-old guy or girl, and they ask you the traits that you need to succeed in the mortgage business. So young guy or girl, aspiring mortgage professional, what do you tell them they need to do to succeed in the business?
Do they want to be successful or they just want a job? Okay, so truthfully, for the most part, I get asked this often from my family. How do I get into it? And people ask, how do I get into this? Because the beauty of the industry is there's really no ceiling, depending on your role. But the flip side of that coin is it can be incredibly miserable. So I tell a lot of people, like, don't do it. Like, do something else. Go learn like tech or machine learning. It seems like it's the good next thing. So I'm a self-deprecating mortgage banker. 25-year-old. It depends on where you want to go. The great thing about this industry, and the thing that I love the most, is that it's really hard to put someone into a single category because it covers so many components of really life, right? If you're in the sales part, you're dealing with just regular people and their problems, and it's a sales job, right? So you're a problem solver. If you have a knack for credit, well, I would just say analysis, right? Like it's really your personality type is you're more introverted, but you still have the same problem solving skills, and you have a voracious appetite for learning. you could go into a different venue. It's the thing about finance is like there's something for everyone. So if as long as you're curious and willing to learn and constantly grow, like that's probably my favorite thing about this is every day there's something new and you're always learning. It never gets boring. It's not repetitious. And one of the reasons I have all those signatures and I've tried all those things that you mentioned on my resume is because there's so many different components of mortgage banking, and not just mortgage banking, banking in general. We have capital markets, which is the equivalent for a layman of like stock trading, right? Like you're looking at you're a bond trader for lack of a better analogy. Your loan officers are high performing salespeople. They end up managing and leading teams, which is if you're a branch manager, you're running a small business. So every entrepreneurial component that you have in you, like it takes all of those. You got to deal with leases and negotiation and people and agent, like you got to deal with the whole thing. If you're working in credit risk, you're kind of in a back office, but you're digging deep into financial analysis and which kind of can lead you into personal finance. So it's not a one size fits all. Like there's just one role or job. There's a job for everyone. It just happens to sometimes be a feast or famine kind of industry. And there's many more like that. Like oil and gas would be another one, right? Where you're in Austin, and I'm not currently in Houston, but I live in Houston. There's not one job. It's not landman or well pumper. Like, they have executives too. They have CFOs, and the beauty of it is if you get in somewhere and you find out that's not where you fit, as long as you have an aptitude for learning and a desire to do so, like you can go somewhere else and find and fit in where you get in.
So
I would say
education's
that
been a
the skill it takes is the same as any other. Like you just have to, if you want to be successful in sales, you got to be too dumb to fail. Like you got to have thick skin, right? That's why I can't do it. People that are in sales, agents, loan officers, branch managers, you got to deal with people all day long and like rejection. And man, I couldn't do that. Like you're a different breed. Like, kudos to everyone that's out there doing that, getting shut down 100 times a day.
so and that is a harder part of the business. And I guess it is a skill. It's like something that you can tolerate, the rejection component. Um, I was going to ask though, in summary on all the research of your resume, it seems like education's been a huge priority for you. So take that same young aspiring mortgage professional. What do they need to study or learn to succeed? Like, where have you gone to learn about the business to get better at your own job?
First you got to kind of have a chip on your shoulder where you need to win arguments. That'll be your fuel for the fire. I didn't get all those things overnight. I've been doing this for 25 years, and if there was a driving force behind it, it was that. It was I had a chip on my shoulder, and I didn't want anyone to know something I didn't know. So most people you start out with, I'm going to learn how to sell and develop those, what are they, like rebuttals and like, I don't know how to do any of those, but I know there's books and books and books on how to do that and interact with people. And that's usually how it goes. From an originator perspective, I can give you that career trajectory because a lot of people follow in this industry like one of a couple paths. They come in and they're an originator. And so you have to sell if you want to eat because you only eat what you kill. And so you have to get better at this thing first, which is selling and relationship cultivation and overcoming objections. When you take it to the next level, you really got to understand like you're dealing with the largest financial transaction of people's lives. From my vantage point, if if I want you to trust me with that thing, which is, I'm going to ask you to write a $10,000 earnest money check based on the word that I said I'm going to close your deal. You're putting a lot of trust and faith in me. That's, for a lot of people, that's 2-3 months of earnings, right? I damn sure better know what I'm doing when I write you that approval letter. So in order to take that skill set and be a great loan originator, for me, it was, I read, your mortgage insurance companies have free training on everything. They're free. And they're online and they're webinars. I read all of them. So does Fannie Mae. So does Freddie Mac. Like that was probably my starting point was Freddie Mac has an incredible like free resource library of webinars, and it's everything, and so does Radian, and so do like all the mortgage insurance companies. When I was doing it, it was Genworth, which I think they've changed their name now. They're either Arch or I think they're Arch. Irrelevant. They have these incredible libraries of education that are free. So like, why wouldn't you take advantage of the free resource? If I'm going to qualify you, I need to know how to do your income. Okay, so that was the first thing. I'm like, how do I master this one thing? And here's all these free resources that all I got to do is watch a video in my free time, and it'll tell me how to do the thing I'm trying to learn. It's like watching YouTube videos, except they're from my companies. And then when you're going through those, they lead you to, okay, well, here's a one on credit analysis and appraisals and how to do assets, how to do weird properties. Like there's so many. How to qualify your borrower, how to run DU. And then, one leads to the other, and it's kind of it's a desire to be the best. Like if you want to be the best track star, you're watching your diet, you're lifting weights in the morning, you're running track, then you're eating again, and then you're studying video. It's the same as anything. Like if you want to do it and you want to be the best, like you got to dedicate yourself to it. And so that was probably from an educational perspective for me. That's where I got the beginning of them. Once you've ingested all those, then you're, from a practical sense, in your day-to-day lives, you're reading the Fannie seller guide, like all regs. It's free. You're not reading it like a book, but you're searching it for your answers. Freddie's is online too. So is VA's. So is FHA's. So is USDA's. So whenever you get a question or more importantly, a conflict from someone like me who's making a credit decision, I want to go read it from the source. Like I'm not taking their word for it. I don't, I grew up in the 80s. I'm 47. And when we grew up, we had a Encyclopedia Britannica set in our house. Like that was, we didn't have Google. And if you wanted to know something, go look it up, right? Now with the internet, you can look things up, but you're still relying on what search results are. And so rather than take somebody's word or take it secondhand, like I want to go to the source and check my references, and that's the source. What you find when you do that is that a lot of people will either just out of, just a habit or training, or sometimes it's laziness, or we just don't have time. You ask me a question, I give you an answer, and it's the thing that I remember most. I might not be citing that correctly. I could be misremembering it. I could be putting my own biases in it. Like we all have tendencies to do. I could be omitting part of the phrasing. One of the things that's made me incredibly successful in this industry as a problem solver is that I don't take other people's word for it. And I encourage everyone not to. Don't take my word for it, because I'm wrong. I'm human. I'm fallible. Like I'll screw things up. Go read the thing and see what exactly it says. And when you do that, you find out that there's more behind the curtain than the Wizard of Oz wants you to believe, right? And there's more ambiguity that you can use to your borrower's advantage to help enable your transaction that someone else who you ask secondhand may have forgotten or may have misinterpreted, or they've superimposed their own understanding of the English language into whatever the thing is. Because when those things are written, they're very deliberate, and they're reviewed by dozens of people before they're published to make sure that they say the thing they're trying to say. And when they're being written by these agencies, you have to be able to interpret them under the framework in which they were intended, and not your own understanding of it. So what I mean is Fannie, Freddie, FHA, everybody, they exist to help finance housing, like for the whole country. And so they have to allow a lot of flexibility and ambiguity in there, because we're not homogenous. Like every market is different, every house is different, every rules, every zoning code, they're all different. So they can't write a code that says it has to fit this box, because everybody's boxes are different. They leave some opening in those deliberately. because they need to enable some flexibility. And what you find is if you take the information secondhand, you'll get a watered down version of what the real thing is, and it's a missed opportunity. For me, like that was probably, phase two of my career. And then, from the chip on my shoulder, I try everything. So I don't know if there's agents on here, but at one point in my time, I was a loan officer and I didn't like agents telling me how a contract read in my market. So I went and became an agent, not because I intended to sell houses, but because I didn't want someone to talk over my head. So I went and learned all the things that at some point I was a real estate agent too. I did the same thing with appraisals. I didn't want appraisers to be able to talk over my head, so I went and got licensed as an appraiser. These things tend to compound. That's why I have so many initials after my name. It's not because I wanted to do all these things. It's because I wanted to learn. And then in order to maintain all those things, you have to keep learning. So I'm a project management professional because I needed to keep my Six Sigma designation. And, I have all these other mortgage banker credentials because I needed to keep the ones I have. And in doing that, what you find is like there's a lot of overlap in concept at the core. Like at the core of how Fannie Freddie thinks, like it's lean manufacturing. Like they really do. And there's a lot of agile stuff in there. And so like, when you start to see them all, they actually get more and more simple because it's the same fundamental concepts. And that's probably been one of the most interesting things about reading all this crap that I read and chasing all these credentials. I don't chase all these credentials because I want an alphabet after my name. Like I chase them so I can just keep the stuff I have, but then they become interesting. It's like a snowball effect. I don't know if I answered your question.
You answered it, and you do have a reputation amongst like loan officers that have worked with you for a while, at this company, at others, people who've known you for a long time. You have a reputation as a genius loan qualifier, and people say that he just knows how to do deals that other people can't. I'm guessing that all the stuff that you mentioned is what has them say that. Or do you take a different approach to loan qualification?
Dude, that's the secret sauce, man, is I try and remove my own heuristic biases from superimposing on the stuff. And if it were golf, like play the ball as it lie. Like I use that a lot, like play the ball where it lie. It's not up to me to decide. I didn't write the Fannie policy. I don't work at HUD. This is the sentence they wrote. And if we all have the same basic fundamental understanding of English, to me, this is how this sentence should read. Not what Jason thinks it should read and not what Corbin thinks it. This is what it says. And what you find is a lot of people don't do that, man. Like it's the craziest thing. Like here's the sentence. It's objective. These are letters in the alphabet that form words, right? With a little bit of punctuation in it. It's not subject to interpretation. And so, that's really like, I don't have a magic trick, man. I just read the books and I read the books as they are written.
So are you saying
but also,
that other people just don't read the guidelines? You read the guidelines.
Yeah, I mean, anybody could do what I do. All you have to do is read. It doesn't even take, beyond an 8th grade education to read some of this stuff. You just have to not superimpose your own, biases into it and in your own interpretations. But you also have to read the whole sentence. I can give you lots of examples. Like here's a couple that come up frequently. In the Fannie Selling Guide, right? You can gross up non-taxable income by 25%. Okay, like everybody knows that part because that's plain as day. And then the second sentence says something to the effect of, and I'm not quoting it, but you can go look it up. It says something to the effect, to document that it's non-taxable, provide tax returns, comma, or other, documentation to show their tax bracket. And what you'll find, like 90%, maybe a higher number of people in the industry stop reading when it says tax returns. Like they superimpose a period there, but there's a comma and a whole nother thing where there's an or. There's a lot of ors and ands or ifs in all of these books that people miss simply because they don't read the entire sentence. In Texas and Arizona and all the community property states, there's a whole thing in all the government handbooks. It says you must consider the liabilities of a non-purchasing spouse comma, unless excluded by state law. Okay, what's the state law? That's like my first question is, what's the state law? Let me research that. Find out what the state law is, and now I know what the whole sentence means. The vast majority of people that they're just not curious enough or what, like maybe that's the difference is I'm too dumb to not be curious and I just won't take it at face. Maybe that's good or bad, but I read the whole sentence and now I get a lawyer in whatever that state is to tell me what is the law. And now I know under the terms in which that law applies. And when you do that, you find that, oh wow, that there's a huge gap where that law makes a big difference. But nobody read the second part of the sentence. And now when you're qualifying a borrower and their spouse has, a bunch of student loans from college that they're counting as debt, well, I read the law. And the law says I don't have to count those student loans against them. Fight me on it because my lawyer says I'm right. It's just curiosity, man. If you're curious, like you can find out so many things. It's probably that's what I would say is different. It's things like that where I'm gonna find the exact root cause of what the guideline is and what the intent and what the meaning is, and I'm gonna read it like that rather than what I think it is. And I have a great example. I was a wholesale rep in the aughts. I remember this. I was in the grand scheme. The universe blessed me with a pretty good memory for things related to mortgage. Like I can remember scenarios from 15 years ago. This is one of them. In many aspects of life, my wife will confirm, like I'm a total idiot. I can't find ketchup in the refrigerator when it's right on the door. But like in some things, I have this knack, right? There was a pay option arm in 2007, and I got in an argument with the underwriter as a wholesale rep because our guidelines were written where it said, follow the product guideline first. If it's silent, follow the Fannie Mae selling guide. So product, then default to Fannie if it's silent. It was a refinance, and the guideline was silent on seasoning. And at the time, the Fannie selling guide for a rate term refi, there was none, which continues to be the case today. So the underwriter was trying to kill this loan because they were trying to apply like their own idea of what seasoning should have been rather than, dude, it's silent, man. Like silent says go here. This was probably like one of the first times when I really battled with an underwriter as a sales guy, doing exactly what, like digging in the guidelines and hammering them on them. And I had to escalate up to the chief credit officer, and she was like, sorry, lady, he's right. We're closing this loan. You're wrong. And like that, maybe that just was the first domino where I was like, oh man, I'm onto something here. And so I was a sales guy originally. Like that's probably one of the things I have different when I run credit risk now and operations in general, but I started my career in credit risk as a wholesale rep with what I just said as like my driving force was I'm going to help figure out what the thing is to close the loan within the guidelines. When wholesale collapsed in 2000, I don't know, 7, 8, I tried doing loans as an originator, and it's really hard for me to do the rejection. You guys have a gift that I just don't have. I internalize it. It's personal to me. My feelings are hurt. I'm butthurt because they don't want to take my call. Like the whole thing. Like I go home and cry and eat my feelings. But I was able to meet a couple agents through referrals, and the problem I had on all of them was I would do the same thing that I just did, where I would find this thing and it's an answer to our problem. And at the end of the day, that's all people are asking for is just help me solve my problem in a way that creates the least amount of pain and the most amount of pleasure, right? And so I would solve these problems in creative and complicated ways as an originator, but I would run into the same problem where there's nobody to think that way on the other side. They don't see the matrix for like they just don't see it. And you're arguing with them and nobody wants to listen. So ultimately I failed miserably at that. I was the loan officer where Everybody knows this avatar where on Friday night at 5 o'clock, I'm on the phone lying to listing agents that, oh man, it's clear to close, like the docs are on the way, and I'm like, I'm freaking out because it's not even remotely close to done, and yeah, no, they're on the way. I don't know. They told me they sent them already. Like I was that guy. It was so horrible. I hate more than anything as now a guy that is the other person that's responsible for sending those docs and clearing those conditions. I would hate for someone that works with me to be that guy on the phone, getting just screamed out and chewed out and like dodging the people in the transaction who are responsible for. Like that's probably one of my biggest driving motivators is like the PTSD from being that still haunts me. Like I can hear it like it was yesterday. The last loan I closed as an originator, the last two, this was like 2010. I missed closing by 45 days. 45 days I was late because I just couldn't. And the seller went on social media and blasted me because she thought I was trying to kill her because she needed the funds from her closing to buy her medication. And I was trying to murder her. The one before that was a referral from a bank teller that worked for my mom. And they were first generation immigrants. Bank teller made $12 an hour. His brother worked as a parking lot attendant. The mother was a cafeteria like lunch lady, part-time. Dad was a taxi driver. And all they wanted to do, they were just trying to get the American dream, right? They pooled all their money together from all their entry level jobs, and they wrote an EMG check for 10 grand for this house, and they were going to share it. These are all adults, and I lost their EMD, and the listing agent ate it because I was ill prepared. Like I did a shitty job on their loan, and like I just thought, I don't know what I did wrong. I ultimately closed their loan, and I wrote them their earnest money check out of my own pocket. Like they weren't total losers. But those are my last two experiences as an originator. Like it feels awful to take someone and lose that's all their money. They make $12 an hour and there's four of them in an apartment and you just lost everything they had. I would never let someone be in that position again. Like it's miserable. So that's probably what drives me to learn all this stuff and do all these things and find solutions because I know what it's like to lose somebody's money. And like the thing that still gets me today is they were totally cool about it. They were like, "Oh, it's not your fault." Kind of is my fault, dude. Like, it is my fault. I screwed it up and I lost your money. You're like, "Don't worry, we know you'll take care of it." I did, but like, Jesus, man, for like 60 days in the interim. And dude, at the time, it's not like it's an easy check to write. Like if you can't close loans on time, you don't have a bunch of loans to close because nobody trusts you to get them their transaction. So it's not like people are feeding me loans where a $10,000 check is really easy to write. I was broke, man. So that's probably things like that where I empathize with the people that have to be on the other side of that and the humanity that's involved in this and how big of a deal it is. That's probably what drives me to keep researching these things and make sure that we're the best. Because Jesus, dude, that sucks. That sucks, man. And if you're the agent on that thing and like you're like, "Oh yeah, I'm gonna refer you to this guy that I really trust." Oh my God, you're eating your hat too, right? So I don't know what the original question was. I just told a lot of terrible personal stories about how much I suck as an originator. But anyway, I say all that to say like I was
Well,
horrible at
Jason,
it. And
all that said, thank God you've been an executive and in leadership in the
yeah.
mortgage business for so long so you
Oh,
don't you can solve these problems at scale with us in the middle of it. You've put a ton of work in at the Mortgage Link in terms of prepping them to move fast, be swift, and reduce loan costs. You've made huge technology improvements there, even while I've in the short time that I've been there, past couple of years or so. So, what are the three biggest moves that mortgage banks need to make with their tech stacks to accommodate the up and coming millennial and Gen Z buyers?
I was just at a conference recently where they were talking about exactly this. Mobile, everything's got to be mobile. That's like number one. It's only people like me that if we're going to make a big decision, we pull out our laptop. Everybody else just does it from their phone. I'll buy my plane tickets from my phone, but like fill out a loan app, it's not part of our DNA because we grew up with pagers. Mobile is definitely number one, right? I think everybody's going that direction anyway. Like that's almost table stakes. And now it becomes how can you reduce friction within the confines of mobile? And that's become a different challenge because the data says that the people that are most likely to embrace mobile first are also least likely to use integrations like Plaid to remove documentation and provide the credentials required to use things like Plaid would be the most common to connect to their income and asset accounts. Long term, that's definitely where it's going. I think if you look 10 or 15 years out, how is a mortgage going to be made? Like there's so much data on at the individual level that I think in probably 10 years it's going to be things will be probably tokenized, blockchain, very customized. They already have all your information. We have a big problem in our industry with trigger leads, but you can have your borrower opt out of every opt in every do not call and opt out of everything there is. But the reality is like they don't need you to provide your phone number. They already have it. And so the data is a whole nother, there's just so much massive amounts of it. I had a guy call me, this was a couple of years ago, and he said, if you give me someone's name that visited your website, just their first and last name, I can get you their phone number and their Experian credit profile just from their IP address for 50 cents.
Surprised by the price so I used to work at Dun and Bradstreet. We used to sell that tool for like $21,000 to start, and then there was like a monthly cost of $9K. I can't remember the exact pricing, but it was It was one of our most expensive tools that we could offer.
Yeah.
And it gave that I think it was called Web ID or something like that. It gave information on the visitors to your website. Amazing tool. I was blown away by it then.
Yeah.
How do you see this going for the borrower? In terms of main idea, is it just going to get easier for them to do a loan application and qualify for a loan?
I think it has to.
Yeah.
We're kind of at a fork in the road right now. So, I don't know how to explain to people that aren't in the industry, but I maybe some of these people that the three people that are, subscribing right now and watching and haven't tuned out because of me yet.
Two people, 2 subscribers.
One of them dropped off. You had 3 before I started.
I'm done.
Before I told that story about killing that, anyway, I think it does, man. I think, if you look at things like Rocket Money or what's the other, Mint, I think was one, and Credit Karma. They give you all these things for free, but it's you're the product now that they're selling, and you're giving them all your financial data. What can I do with that data on the back end? Well, now I know your income, I know your assets, I know your spending patterns, I know where you live, I know how much you spend on groceries. I know everything about you, and it costs me nothing to get it. So the next logical iteration would be, because I know all of this, I can tailor something specifically to you that is affordable. And I think what ends up happening is you just end up with like a constant offer that changes based on your profile of this is the exact loan that you qualify for, Corbin. Like it's and to the dollar, maybe to the penny, because we have so much data. Like that's just math. It's a math problem. Do you want it? Here, push this button. Once we get all the deeds of trust digitalized, which we're doing that now with eNotes. It's effectively blockchain. So you'll have the deed of trust and the deed for the house can transfer electronically. So I don't need paper for that. I don't need your credit information, your bank information, your income information, anything about you. Like there's a file that has all that, and it's in one place right now. I don't need you to go through this elaborate underwriting process because I already have all these components. I can just say, yeah, this person's good, this person doesn't work. Hey, but they do work at this, other scenario. Granted,
Our tools will be at that point. Our tools can make those decisions,
they'll
right? They're
just
just
make it automatically. There won't be
green,
human
yeah,
intervention.
green,
And
green or red.
what'll happen is you'll still need some appraisal, like to inspect the collateral, but it'll end up being lighter. It's getting lighter and lighter as they get more information. If you look at the size and scope of the databases that they have on these right now, Fannie and Freddie created the Uniform Collateral Data Portal like 15 years ago or something. Every transaction, every mortgage, they upload an XML file into this data portal, and uh, and you have to do it for the Fannie or Freddie loan, but just as a matter of practical application, we do it on every FHA loan. So they get every single transaction, and they get multiple iterations of every house too, because they have so much data, and they already have. That's in addition to public records. Now they got photos of every house. They got photos of the same house 3-4 times, plus every neighbor. Like I got every house in the country that's ever been financed in a database. All I really need to do with the value, with the room count, with the bathrooms, with the photos of the whole thing. The only time I would ever need to get any more information is I need some photos just to make sure that it's still the way that it was the last time we looked at it, right? I don't need value because I know every house on the street. So it'll be like something really light, like, oh, just go in and take a photo of the kitchen and the bathroom, and you're good. And at some point you could get the borrower to do that. There's already tools that are I could enable a borrower using geolocation on their phone to take photos of the kitchen and the bathrooms and whatever rooms I wanted, the deck, the garage. Like we're really close on that too. It's on the one hand, it scares the hell out of me because as with an operations background, that the aforementioned myriad of failures in sales, like I don't know how much runway I have left because all the things I do are being done by computers now. On the other hand, it's an incredible opportunity because at the beginning of my career, like we started a company and we had these thick paper files that we were moving from one part of the office to the other, all and around. So like to see that in not only within my lifetime but like within a subcomponent of my life is it's amazing and it's exciting because what the hell are we going to do next?
Yeah, that's
You
what. So
know?
my question is, so for companies like Rocket, who are already the biggest, mortgage lender in America,
Yeah.
what's stopping them from that next phase for us, which is where the client doesn't have to do the application, upload the
What stops
docs.
them?
What's stopping them from bypassing that
That's our saving
application
grace.
and doc process?
That's our saving grace right there.
Yeah,
Because this is still a relationship business and people do business with people. And that's about trust. At some point in the future, like maybe they'll trust Rocket to do all this stuff by themselves. But like right now, if you're buying a house, you're using a real estate agent, irrespective of the NAR settlement, right? Or you're buying a new construction and it's the builder person, but you're not going and finding it on your own. Like you still need to go see things, and in order to see them, you need an agent, and because of the contracts and in the entire process, especially if you're a first time home buyer, you really need an expert to walk you through that. And that person that's going to do it, it's a friend or a family or a friend of a family or a family of a friend. Like it's somebody within arm's reach of you, right? It's not, I'm going to go on Zillow and buy a rando yet. The leads might come that way, but like for the most part, I still think that a lot of people do business with their agent is like some sort of family friend or close relative, right? And that person helps to guide the transaction, generally not through Rocket. And it's through someone that they trust who, not to be self-promoting here, but they usually work with someone like me where they know that this thing is going to happen. That's probably the biggest the biggest hurdle that places like Rocket have to overcome, in my opinion, is that this is still a relationship business and there's still so many variables with the human condition that you really can't program, right? Like every person is different. Sure, as a whole, like it's very homogenous, but like everybody's individual story is a little different, and that takes some customization, and you can't program that in yet. Will they get there? In my opinion, yeah. At some point, they'll be able to do computer programming at a level where it allows for that degree of customization and optimization, but it's not today, and it's probably not anywhere in the next decade. We still need people to manage people, because people don't necessarily always behave in the most predictable ways, right? And they don't fit into a box. That's the one thing that's going to stop them, is that we're humans and we're highly unpredictable. I mean, did anybody log into this podcast and think some guy was going to tell a sob story about the last loan that he closed and how they were, nobody saw that coming.
What a
I didn't even
curveball.
see it coming.
Jason Harris, thank you so much for coming on today. This has been amazing. I really appreciate you. I appreciate the time. I know you've got some exciting stuff going on right now, and we're looking forward to seeing what you guys come up with. Thank you.
I appreciate it. I hope you still have some subscribers after this, and I apologize to the FCC for anything that I said. It was my
We're
fault.
actually
Not his.
we're down to 0 now, but
All right.
we can
We'll
rebuild
get them
something
next
new.
time. Yeah, you're going to scrap this one and throw it in the closet. But thanks for having me. I appreciate it, man. It's been a pleasure.
Thanks, brother. Thank
Anytime.
you.
Have a good
Thanks
one.
so much. All right.
Bye.
If we already know each other, thanks for dropping by. If you're a first-time listener, then we'd love to hear what you think. Please follow wherever you're listening and consider leaving a 5-star review so that more awesome people like you can find our content. To learn more about loan options with Corbin, visit MatiseMortgage.com and click free phone consultation. Take care, and we'll see you next time on House Money with Corbin Matise.